Now let's turn our attention to mechanics of the pick. At Tradespoon, we provide not only technology where you can use to spot opportunities in the market, but we also provide you with our daily trade recommendation, where we provide you specific entry and exit prices for stock, option, and option spread strategies. So our first trade that we would like to discuss is Morgan Stanley. And we know large banks have announced earnings in the past couple of weeks. JP Morgan missed earnings, Wells Fargo missed earnings, so they've been under pressure for the past couple of months. We feel like that the prices of Morgan Stanley has been stabilized and has been a great pick from the last year, and we think that going into the next 50 to 75 days, it will outperform the market, and we recommended going long on Morgan Stanley. So Joe, what do you see for Morgan Stanley pick?
Yeah, you know what, like you said, financials have been under pressure. There's a little bit mixed messages with low interest rates still continuing around the world and here in the U.S. Just taking a look at the pick real quick, you went out with the pick at around $35 as the entry price. It's currently trading at $34.30, so not egregious by any means as far as a pullback. The options trade, taking a look at the March $30 call or $35 calls, the suggestion was $1.30 entry. It's trading at $1, so you've had a little bit of a decay there. But it is a March option, so you do have over 45 days. That allows you to possibly, if we get the volatility to hold up in here, to maybe sell some February options against it, or even maybe a March option and spread it off. Speaking of the spread, the March $38 call spread. This is a bull call spread, so it will appreciate if the market goes up, especially above $38 or at $38. It's currently trading right now for right around 75 cents. So it's a little bit of a pullback on the entry of 102, but still not dramatic. A lot of that is attributed to, as you said, the volatility coming up, because you see the IV rank was around 50% into the earnings announcement. That volatility has been pulled out.
Thank you for that insight. And the second trade recommendation that we made in the last week is Travelers Insurance, symbol TRV. And again, our last year, insurance companies has been moving to the upside. We think this trend will continue going to the next year. There are several insurance companies, ticker symbol ACE, ticker symbol TRV, that has announced earnings in the past couple of weeks. So Joe, what do you see going for TRV?
You know, as far as catalysts are concerned, as you can see under key stock events, it doesn't have earnings until April. So there's really no earnings catalyst or anything of that nature. You're going to keep an eye on the markets. Specifically, keep an eye on the fixed income markets as well as the volatility markets. That's going to give you a little bit of heads up. The one big thing here is that it has a vol change of around 80% when you initiated the idea of being bullish on TRV, Travelers. The stock was trading at 108.17. It's down to 106.58. It's been under pressure a little bit. Everyone's trying to figure out what a lot of these companies are going to be doing with their cash and so forth, because they do sit on an awful lot of cash. And so again, if you're in this stock, if IV starts to rise in either February or March, take a look at maybe selling some out of the money calls, maybe about one standard deviation out of the money. The options trade, the March $100 calls, the suggested price going in was $8.15. It's currently trading around $7, down $1 from that, $1.15 from entry. Again, a lot of that's attributed to the pullback in volatility in this name. When you initiated it, it was high. So now you're seeing the impact of a volatility crush, especially in the earnings. Be aware of that going forward, especially if you're going to start putting some April positions on. Just be aware of the fact that that could happen again. With the spread, the 100-105 put spread, this is where you're selling. It's a bull put spread. You're selling the 105 puts. That's currently trading at $1.10. It's actually held up there. It's been interesting, Vlad, with the stock pulling back. Even though the vol crush, the pullback is enough so that it's holding up there. So again, keep an eye on your risk. See if the pullback does, if we can't solidify here a little bit of a floor.
Thank you, Joe, for that insight, and thank you, everybody, for being part of the segment, Tradespoon Mechanics of the Pick.